Welcome to Hitting Home with Mike and Arif. And today, Arif, I thought we could talk about something. The term comes up a lot in previous shows, and we've touched on it, and that is real estate bubble. And where we certainly hear that term used and overused is in our media. And anytime there's a run-up of housing prices and high demand for real estate is when we start to hear different elements of the media, and perhaps because it makes for, eyeball-grabbing headlines. I don't know, but we'll see. Oh, we're in a bubble, and it's going to happen, or it's going to crash. But I think for us to actually be in a real estate bubble, there are certain elements that have to be in place to trigger it, and just the high volume of real estate activity and the rise in prices in and of themselves does not necessitate the fact that we're in a bubble. There has to be a high level of speculation. And let's get into this a little bit more. What are your thoughts? What would you say in your mind as a mortgage broker, as a homeowner? What do you see as being a bubble?
Yeah, good question, Mike. And I'm glad we're talking about this today. I think you touched on a lot of great points there. First and foremost, I want to look at it through the lens. People see the word, they see the buzzword, the cliche, the hashtag, whatever it is out there. And, it really depends on who your audience is, who's reading that, who's hearing it, and how people are ingesting it. If you've been in the same home for 30 years and you're not planning on going anywhere, and you've ridden, the wave and the cycles, et cetera, it really doesn't mean anything to you, does it? But yeah. If you look at whose lens we're looking through, what's the motive? What's the motivation? What's the rationale behind stirring the pot, so to speak, and raising the fear? Mm-hmm. I remember back in 2008, we had a prime minister that said, "What recession?" And there was no recession. And it wasn't until people really started talking about it and validating it that it actually manifested and became something, no matter what was going on south of the border. With regard to bubble itself, you've got regulators, you've got, legislators, you've got the banks, you've got the Bank of Canada, you've got economists, you've got people whose businesses sort of ebb and flow based on these market conditions and market trends. So I want to keep this really plain English, though. Forget the textbooks, right? And let's say, how does it apply to me, the average human being, the Canadian citizen? And that is, if you think about a bubble, well, a bubble is something that eventually bursts, but it's not something that's inflating. It's not something that actually reaches a certain mass. It's something that eventually can't handle the pressure anymore and bursts. So when we think of a bubble, we think of, in housing, we think of, well, are these prices just going up, or are they going up and they're not sustainable? They're not supported by something that we can back with science and fact and rationale that makes sense that these prices continue to creep. So I'm going to tell you right off the bat, Mike, you asked me my opinion. My opinion is this: we are not in a bubble. I absolutely, and I'm going against the headlines. I'm going against the chief economist. I'm going against the Bank of Canada. We're not in a bubble. And the reason we're not in a bubble, Mike, is for some of the reasons we've been talking about for years on this show. There is no Canadian real estate market. There are micro markets within Canada. And we see in Simcoe County, or we see in areas that are outliers of the GTA or major metropolitan areas, we're seeing housing prices inflate or grow and creep. And that's based on supply and demand. And that supply and demand is not natural growth, natural turnover, and natural migration. That supply and demand is because, hate to bring up the topic, COVID has caused people to question and businesses to question, do I need to be centralized in the downtown core? Do I need to be working for my office tower? Do I need to be paying overpriced, overheated rents in a downtown core versus owning a home and I can telecommute or work remotely? What we're seeing is natural, sustainable. As long as there's COVID, people are going to pick up and move, and they're not going to move back tomorrow and sell their house necessarily. So people are making a permanent move or a longer term shift by leaving the GTA and moving to outlying areas. And that's what the houses to increase. That's a long answer, Mike, but it's a big question.
Sure. It's and let's make it even longer. Let's put it in perspective by, if we want to determine, are we in that bubble right now, which I agree with you. I don't believe we are. If there's a correction at all, I think it'll be far less significant than what some of the media is saying. We're certainly not going to go back to prices we saw a year or 2 years ago. I think if anything, and I've said it before, we'll see a quieting, a leveling off, and everything else will start to catch up. I don't think we're going to suddenly turn around and go back to where we were. And again, because the demand is going to continue. And I think the reasons for that demand are more solid than, let's say, and let's go back to the 2007, 2008 bubble. What we saw there, and primarily in the United States, and we kind of followed suit because, you know, what happens in the States, there's an echo effect north of the border. But leading up to that, that was, we had a tech bubble where a lot of money was invested in the stock market, in the whole tech industry. It was a new thing. And so much of that was speculative. And that was a bubble for certain. You know, the prices were unjustifiable on some stocks. And suddenly that hit its peak and started to crash. People were retreating, they pulled their money. And so there was a lot of people who wanted to remain invested, but they shifted away from the stock market. So they came into real estate as the next greatest thing as a safe place to put your money. So lots of money started being put into the real estate market. And then there were a lot of Wall Street products being invented that allowed people to speculate not just on housing, but speculate on the mortgage products themselves and bet on their failure and short mortgages. So it was just creating this house of cards that was destined to fail. And mortgage interest rates not only were low, a lot of lenders in competition with one another were willing to give you, for your purchase of your house, 110, 120% of the overinflated value of that house. So a lot of people were upside down.
People were making profits on other people. Mike, I want to go to break real quick, and I want to keep this conversation going.
I'll bring that back.
I think there is a lot to talk about, and what I'd like to talk about when we come back is some of the similarities of both 2008, but also 2017 real estate in Canada, and the differences, or similarities and difference. But you don't want to leave the show. We're having a great conversation, and I think this one really does matter to you. So stay with us. We'll be right back after this break on Rogers TV. More from Mike and Arif on Hitting Home.
Welcome back to Hitting Home with Mike and Arif, and we're talking about real estate bubbles, a term we hear in the media quite a bit, and looking to see, are we in one now? Because typically there's a run-up prior to the end of a bubble, or when it's determined it's a bubble, that's a run-up, and then it runs back down. The demand that we're seeing for housing right now, we've determined is pretty solid, pretty substantial. It's not speculative, and usually it's speculative when it is a bubble. 2007, 2008, 2009, we were in a bit of a bubble. There was one other period, 89, 90, I believe we hit a bubble, and that was, there was a lot of homes being built in Ontario on spec. Housing material prices went up, interest rates went up, and people backed away, and that created a bit of a bubble. But bringing it back around to today, Arif, the demand that's there is there for solid reasons. There are a lot of people who need homes. There's a lot of people right now who have been saving money. They haven't been spending money in the past year and a half because of the pandemic. So they have money to spend on homes. They are moving around. They're moving from the big cities into smaller communities. There's a lot of dynamics to why people are buying homes right now.
I think what you're touching on some really good points here, because as you said, a lot of what happened certainly in 89, 90 and in 2006, 7 and 8 was based on speculation. That was based on hedging bets that if you build it, they will come. And here's the thing, I think what's really important is that we will have audience members, there will be Canadians who say, well, I see some similarities. Building material prices have gone up. Absolutely, they have gone up. If you go to your lumber store today, if you go to your Home Hardware or your Home Depot type of store right now, and you try to buy lumber, certainly pressure treated, you're going to see that either they have a limited availability. In fact, their head offices have given each regional store quotas, and many have already sold their quotas for the entire season, and we're not even into the building season yet. So you are seeing these runs and these demands, and the prices inflated because of supply and demand. However, there's a big difference. It's not speculative. As you said, people have not been taking their world vacations. They haven't been going on cruise ships. They haven't been going to Disneyland. They've got nowhere to go. And so they're turning inwards and they're saying, staycation. If I got to be here, I might as well enjoy it. They're also saying, here's the other thing that's not speculative, okay? The thing that's not speculative, Mike, is that for decades and generations, people have been trained to believe that if they're going to have a good paying job, if they're going to have an above average paying job or career or profession, that they must commute or subway in or live near within walking distance to their office downtown Toronto or in a major metropolitan area. This pandemic has done something that we haven't seen certainly in our lifetime, and that has shifted the dynamic. All of the people who sat frustrated saying, I wish I could, or if only I could have the best of both worlds and have my job and not have to be downtown, then I would live outside and work. And we're seeing that happen today, Mike.
Yeah, well, that's finding itself out, and a lot of businesses are figuring out whether they need their staff, 5 days a week, 8 hours a day in a physical office space, or if there's some sort of hybrid between being in the office and working from home. And I think as we go forward, we're going to see more and more of that, and technology plays a part in that. The pandemic has certainly necessitated that remote working, that's what I'm saying is the game changer, though. I'm not just saying anything else that you're saying. All of those elements may be true, but this is a game changer. This factor that people have proved to their employer, or employers have proved to their shareholders, that we don't need to have these huge holdings in the downtown space, and that we can do it remotely, and technology allows us to do it successfully. For sure. This is the game changer, and that's why it's different. That's demand. And another component to that is consumer confidence. And our level of consumer confidence, even throughout this pandemic, remains high. I mean, it's polled, it's researched all the time. Confidence is high. And the one thing that would shift consumer confidence would be a sudden rise in real estate rates. And I don't mean by a point or two. I mean, if we went from the 1.9 to 2% that you're able to get right now, and suddenly we're up to 5-6%, then things would change dramatically. But we've talked about this, and we know full well that the Bank of Canada knows that would be literally, that would be arson for them to do that to our economy right now. So rates will remain. So rates, I'm confident they're going to remain.
Yeah. So, and you're 100% correct. The economy is fragile. I mean, people have just taken the beating of a lifetime over the last year and change, and we don't need that to happen. And so certainly the regulators are scared. Remember, we talked about in the first segment, right off the bat, it depends on whose lens you're looking through. And so there are people who are out there because they are genuinely concerned. People are spending more. Household debt ratios are probably up a little bit. Housing prices are up. And by the way, when you and I talk about what's sustainable and not sustainable, the bubble is when it's not sustained because it was speculation and there wasn't the demand to fill it. If you ask people locally here in Simcoe County, if the increased housing prices are sustainable, I guarantee you the majority of local people will say absolutely not. However, no offense, with all due respect to our local audience, it's those who are coming from the GTA who say, yeah, that's half the price of what my house is in Toronto. I'd be mortgage-free moving here. It is sustainable. It's not personal, it's factual.
That's the difference. And because of the rise and the drive in our market, it's coming from elsewhere. It's coming from the GTA. You're selling your house for $1.4 million in Toronto. Sure, you can enter into a bidding war in Barrie for a house that's 50-60% of the price. But the unfortunate part of that is it pushes local people out of the market, because if you're the other person in that bidding war who's just sold your Barrie home and is buying something else that's within the same price range of the place you just sold, you don't have that leverage to work with when you're bidding against that Toronto person who's selling to buy up here. And that's unfortunate. And that's that I'd like to see correct. And that's where I'm hopeful we see a leveling out of the playing field. So it just allows us to catch our breath and allows all the elements that impact and give power to buyers, local buyers, to start to return and build again.
Yeah, well, Mike, I'm going to tell you, I don't know if it's offside, but I'm certainly going to say this. Again, I want to be careful how I choose my words, but you've heard the term sober second thought. I would say let's not have any buyer remorse. If I was to give guidance to anybody who's watching or anybody who's considering, I would say take a breath. Take a breath. We thought 2017 was never going to happen again. Well, guess what? 2021 is happening. 2020 is happening. These things will ebb and flow and cycle. We do have to go to break. When we come back, let's give some guidance. Let's give some professional guidance to our audience and those who may be considering: do I sell and do I buy? And I think quite honestly,
and how to approach it.
What we share with our audience might not be what is expected. So stay with us on Rogers TV Barrie. We'll be right back with more from Hitting Home with Mike and Arif. And welcome back to Hitting Home with Mike and Arif on Rogers TV Barrie. And Mike, we're talking about a very, very hot topic, and that's the hot housing market right now. And in the first two segments of the show, we certainly talked about why we're debunking what is someone else's theory that we are in a bubble. We don't believe that is the case. We do believe, obviously, prices are continuing to increase. I think that there's some signs in the marketplace that maybe the overbidding might actually correct itself a little bit, might become a little bit more normalized. But certainly there's pressure on the market as we talk about a speculative third wave, as we talk about people still wanting to leave the GTA market and come into Simcoe County. But now now that we've covered that, I think we've done a pretty good job of that. I hope we have. Let's talk about, so you're thinking of selling or so you're thinking of buying. Right. What are the things to look for, and how do we do it in a safe, responsible, professional manner?
And I'd like to say that just because, Arif or myself might say, well, no, it's not a bubble, regardless of whether it is or it isn't. The type of market we do have now, I think it necessitates an added level of caution. You should always be cautious when going into purchase a property, but an added level of caution. And some of the things that I'm telling my clients is be prepared that you will be entering into a bidding war if you're going out there right now. And knowing that, leave yourself a little bit of room. Don't search for homes up to $700,000 if the amount you can borrow is $700,000. But even more so than leaving yourself that wiggle room is stay $50,000 to $100,000 below the amount you can actually afford, for the reason of just giving yourself a little bit of space to maneuver if should something happen in there. Plan to stay in your home for at least a couple years. If you're buying on spec right now, thinking you can go in and paint and put new countertops in, and you're going to get $50,000 more tomorrow, yeah, you may do that, but it's a roll of the dice to know that. But if you're going to be, the longer you're in your home, the better the chances that any value dip you might see is going to return and correct itself over the longer term.
I want to jump in with that, actually, if I might, and that is really this. I mean, first and foremost, let's be very clear. My thoughts and your thoughts that we are not in a bubble is because we don't believe that the current rise is unsustained by demand for the product. I am absolutely certain that if COVID and everybody gets vaccinated and businesses say, okay, we're back to business as usual, I do not believe we're going to see a rush of people to sell their home where they finally, for the first time in their lives, got grass or got a detached and aren't living in some quarters, because I honestly believe that for our lifetime, people are going to remember, I'm not so sure I want to be stuck in an elevator anymore or in a confined space where I can't go out and enjoy myself. So I do not think there will be a mass exodus from the outskirts, from the rural areas back down to the GTA. I do think people will continue to fill the GTA, but I don't think it'll be these people. Here's the thing. That doesn't mean that there's not anxiety about the rise in housing prices.
Oh, for sure there is.
I still believe that there is anxiety, but I don't believe it's a bubble.
I would preface anything we say here with the fact that the symptoms and the causes that we're seeing out there in and of themselves are not going to cause, there needs to be added factors for this to be a bubble. And the main one is one I touched on earlier, and that is a sudden rise in interest rates and a sudden drop of consumer confidence. And neither of those things appear to be something that's going to happen. So just back to tips that I'm offering people, as well as I'm telling people to buy into neighborhoods with future potential, and by, close to transportation, schools, areas that are being gentrified and revitalized, where values are likely to continue upwards. And again, buy that home where there's value added things you can do with that home. If you're buying the home that's finished to the nines and there's not another dollar you can spend on it, and you're paying top dollar for that, then you've got no room to go up further to fight against any correction.
So let's talk about that, Mike, because again, one of the things that we talked about in previous shows about gentrification, for example, I'm glad you brought that up, is opportunity. Mm-hmm. Opportunity is not when everybody's already doing it. Okay. Yeah. So that's not opportunity. That's have some forethought. If you are a young family, consider an area that you see a future that you would like to raise your children in, or that you would like to retire in, or grow into, and you see the potential of that neighborhood. That's great. From a speculative perspective, though, I really want to be careful. Again, the guidance that you were giving, if you think you're jumping into this market right now and you're going to put some lipstick on it and you're going to, do a flip, careful. Because as we just talked about, we are going to see those overbiddings start to subside a little bit.
It's going to level off.
The value is going to go down. It means that the rage, the craze.
And what will level that out is when supply and demand equalizes, when we suddenly see the people who've been holding back from selling, and there's a lot of them, and there's a pressure point we're going to build to, and suddenly we're going to see people bringing their homes onto the market. And, instead of 3 buyers for every 1 home listed out there, it'll suddenly be 3 or 4 listed homes for every 2 or 3 buyers. And with that, that's where your leveling out comes in. If you're paying for a mortgage on a property you own, or you're paying rent, either way, you've got an output of cash. So for the next 5 years, if you think I can just step back and wait, you still have to pay to live somewhere. So I think most people's thoughts are, well, they might as well be paying a mortgage, because I've said it before, you're paying a mortgage regardless, because the person renting you a home has a mortgage to cover in all likelihood too. So getting in and holding for the long term, in my opinion, is still the better bet than waiting for anything like that. If you're waiting for prices to suddenly drop, there's a better chance that you're going to end up buying at an even higher price later on.
I don't think prices are going to suddenly drop.
Yeah, and that's not to put pressure on anybody. You need to know you're comfortable. You need to talk to this man over here, Arif, and find out if, are you in a good, responsible position economically and financially to enter into home ownership.
We're going to have to wrap this up. So I just want to take that moment real quick and say, listen, be very careful. Whoever you go to, sure, I'd love you to come to me. I'd love to spend some time with you and discuss your family's needs or your personal needs and how you're going to support it, how you got from where you are to, or where you want to be, et cetera. However, whomever you go to, please seek good guidance. And when you do that, realize this: there is no such thing as a pre-approval or a pre-qualification. And when I say that, yes, there are. Those things exist. They're worthless.
The terms exist.
Anything. The term exists. It doesn't mean anything, because it is such a superficial look at your financial position where you currently are. And there are so many things that it doesn't take into consideration. So buyer beware, be careful. Don't go shopping just on a pre-qualification. Know what's behind it and know that you have exhausted and tested all those models, but it will take the property into consideration. We are going to have to wrap up. Mike, 10 seconds of final thoughts from you.
Yes, Arif, and I would say the overriding advice is to proceed with caution and have all your ducks lined up before you head out there. And hey, everybody wants to live in Barrie and in the Barrie area. So it's going to continue to be a busy area. Thanks for tuning in to Hitting Home with Mike and Arif, and we'll see you next time.